Talk to me about the types of investors you're seeing and any of the trends you're seeing develop.
We work with a number of different types of investors at Bitwise, a few thousand self-directed high net worth individuals, tens of thousands of public shareholders of our publicly traded products, over 1,000 RIAs, so independent advisory firms, a few dozen institutions, and more recently, a really fascinating development. Just in the last, I want to say 9 months, there are 7 private banks and broker-dealers that have put our products on their platforms for their advisors and clients to be able to get access to the space. And the platforms that over the last, again, I don't know if it's 9 months or 12 months, but it's been recent and ramping, approving our products to get crypto exposure. They represent $2 trillion in assets, and tens of thousands of advisors and millions of accounts. LPL is one that's public. So that's sort of the cross section. We have a sort of a broad cross section that we serve today. I think an interesting comment I could make is that these different audiences actually have different areas of interest. So when I go meet with our clients who are advisors, which we spend a huge amount of time with, we have relationship managers across the country. There, the conversation is often, I'm building my thesis, or I'm making my first allocations, or I'm going from my first allocations to more allocations. I'm thinking about a model allocation, and I'm doing it through the Bitwise 10, or I'm doing it through crypto equities. And we have conversations about, what do you think about publicly traded crypto equities versus the coins directly, or both, or some combination. And that is where the focus typically is in building that sort of core position into the portfolios for clients. The trajectory there, Raoul, and I can talk about what we see from individuals and other segments, but the trajectory there, in 2020, 6% of advisors said that they were allocating to crypto, client money to crypto. That grew 50% year over year into 2021 to 9%. Still small, meaningful because it's a giant audience, but small. This year, it's supposed to grow another 70% to 16% of advisors allocating. If you play that forward, you're at 50% of this segment having allocated by 2024 or 2025. So it still feels early because 9%, 16%, those don't feel like everyone I talk to, but the rate is what's important, and the rate is a wave that's gathering steam. So that's what we see with financial advisors, who are our core audience and an amazing constituent that I think more investors would benefit from sort of having their help around investing in crypto. And then for institutions, families, ultra high net worth, there we see interest in more specific parts of the opportunity set. So we launched a DeFi index. We launched, believe it or not, a blue chip NFT index. We have a new index coming next week, actually. We also launched our first yield-bearing interest product. It's a QP-only product. It's the Bitwise US Dollar Income Fund, and that lends to the non-DeFi part of the market and generates high single-digit yields on overnight terms. We'll have our first active product later this year, actually, but can't say more on that at the moment. And then of course we have the standard index set and the SMA. And we found that has been sort of those specific exposures have been a strong area of interest for the high net worth and ultra high net worth client set who want to construct around conviction on different parts of the opportunity set.
I've seen that with what I'm doing at Exponential Age Asset Management is we're seeing the family offices and others looking for specific risk, because most of these guys are already crypto investors and have been for a while. And it's looking for, DeFi is very tricky because of regulation, KYC, AML, and stuff like that. But NFTs has been very interesting. As you say, people are sub-segmenting down even by asset management style. In my world, it's, emerging crypto hedge funds, market neutral funds, multi-strat funds, all of this stuff. So it's really interesting to see the sophistication of that. And the family offices are generally always the first movers anyway, because they can take their own risks. They got nobody to report to. And they've always led. And you kind of know where the rest of the market's going by following those guys.
I just want to note on the NFT thing, I think this is so fascinating. Between our Bitwise 10, so large cap crypto index, our public equities index, which is the BHQ one, our DeFi index, we even have an index that's Bitwise 10 without Bitcoin, and our blue chip NFT index. The blue chip NFT index is down the least year to date. Which
in dollar terms, not ETH terms.
In dollar terms. Yeah. It's down 36% year to date. Yeah. So it's about where the NASDAQ is year to date, which anyways, it's so fascinating how this space is evolving. When you and I got started, there was no DeFi, there was no NFTs.
Nothing.
Yeah.
So when you're having conversations and the market's down 50, 60%, what is the Bitwise 10 down now? Must be 60?
40, I think it's 40 or 45, something like that.
Yeah, so the market's down 45%. So in my conversations, I've not met anybody who said, oh my God, the market's down. Yeah. It hasn't seemed to have changed the conversations, which is weird. In 2018, we're having conversations. People are like, oh no, I'm not getting involved in this. Have you felt that people have understood volatility more and drawdowns more and the opportunity set? Or have you seen that some people are like, whoa, this is too much for me?
Yeah. Well, I think the backdrop, of course, is that IVV's down, VTV's down, AGG's down, GLD's down over 2 months. So everything that's liquid is getting sold. And I think that people have bigger fish to fry, generally speaking, especially if they have 1 to 10% in crypto. And so it's not as in focus, I think in terms of the performance. I think the two things that we hear a lot are, what do you make of these correlations? It seems that crypto is down alongside the NASDAQ and other things. The second thing that we hear is, are people using these things? So we find that some people are sort of wanting to check in with the actual adoption of the platforms, right? Okay, the price is down. We're checking in on equities and how those businesses are looking going forward and earnings expectations and how will they be impacted by the inflation and supply chain. We're also intuitively interested in checking in on crypto and understanding, price is down on everything. What's the underlying trajectory of adoption and things getting built here, which we could talk more about. I think that's the most interesting thing. And then the third, the third vantage point that we see, most investors who will own crypto don't own it yet. So you, me, I imagine many of the savvy investors in the Real Vision audience own some crypto, own a lot of crypto, have started building their crypto position, but a huge portion of the investing markets actually have not started building their crypto position yet, or have just started building their crypto position. So, I think that changes the dynamic. And for some people, they say, this is interesting. I'm rethinking a lot of my portfolio. Maybe now is actually the time to I've had crypto on the to-do list, and maybe now is the time to dig in and understand how I would play the space. So those are the types of conversations we're having today. But to your point, it's not like 2018 when it was, the in vogue thing to say was that it was a tulip mania. And then in 2018, there was a thought that maybe this thing was going to go away forever. And then of course it didn't. And so I think that is not as much the picture that we see or hear.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.